Good morning, it's Harvey Jackson. I'm just going to get through some news items here, and let's just get into it. Wheat market seems to be assuming Russia-Ukraine will continue to ship, which they did after the Black Sea got blocked off during their initial conflict, and the market is just assuming that's going to happen again, and it very likely will, as they are major shippers of wheat. But there's still some problems out there. You got Europe with lowering its production as harvest is progressing along there with all that heat, and both and just about all crops there. Corn is probably leading the way, and then you got even your wheat and canola moving down as well. So in this headline, Chicago wheat edges lower, but Black Sea export threat looms. But the market does not seem to be concerned about it, as they just assume that it will get fixed. So corn is rising toward multi-week highs. Still gains are capped by the generally favorable crop prospects in the U.S., but there's problems in production in China and in Europe as well. The status of the U.S.-Iran talks uncertain as another ship is struck in Hormuz. This problem just seems to it's feeling like a forever war, which Iran don't mind pulling people into, that's for sure. Here's your crop progress report. It came out yesterday. Corn down one more point on the crop conditions, down to 61%. And again, this is a beauty contest driving by. I don't know how much they measure as far as crop conditions. As a plant matures, it doesn't look as nice. That is for certain. So soybean crop conditions 63%, down from 64, and same thing, down 2 points on corn. And then your spring wheat conditions actually improved by 3%, and your winter wheat harvest is at 86, so it's behind pace from last year. Japan, U.S. likely to intervene again if there's going to be continued problems, so to prop up the Japanese currency. Both Japan and U.S. had a joint effort to try to prop up its currency, and it looks like they might have to do that again. So the currencies in the world are some of these economies are just having some issues here for sure. We're just weakening economies, and Canada's along with that as well. The other point that I will make about the Canadian side is that it just as the Canadian dollar goes down, sure, it helps the basis, but everything that people consume and buy in Canada are basically priced in US dollars. And as that dollar just keeps on going down, you just end up spending more and more money. So we do not want a weak Canadian dollar. Like, we want somewhere, in the mid to high 70s to 80 cents would be closer to ideal, probably. Cheaper fertilizer, cheaper fuel, cheaper all goods, all that we buy from the US. But ultimately, everything is priced in US dollars. You can see that there's moisture building on the backside of this, kind of like a dome here. Here's your temperatures. You can see it does cool off, and then you got a heat wave that's coming behind it. And this is probably going to be the biggest concern area where there's most dry, and yet this here is actually kind of helping the growing conditions. And that's why the market is not too panicked on conditions here, because you can see that there's moisture that's getting added in just about every weather model into the key soybean, corn growing areas. Here's a 2-week forecast, and you can see that the moisture gets added, and then actually North Dakota, South Dakota even gets hit there too in the middle, in a week out. And then looks like the prairie provinces kind of get a blanket as well, and you can see the moisture, or the inches of rainfall that's going to hit there as well. So I would just show this map. There's always the other maps, but you can see the root zone drought model. There is it's starting to show some dryness for sure, but you can still see that the corn soybean areas are not 100% void of drought, but there's lots of good areas, that is for certain. So that shows in this 7 and then the 8 to 14 day forecast as well. Quick look at the market. So we had yesterday a pause on the canola, and now it's up 15.60 at 7.73. Soybean oil is up a half a penny at 69.35. Crude oil is up $1.36. It was down 5. It was actually below $80 a barrel yesterday. Soybeans down 5.5 at 11.86. Spring wheat just up a fraction at 6.95. Red winter is trading right at 7.18. Milling wheat is just down a fraction at 2.25. Corn just basically unchanged at 4.49, and Canadian dollar is basically unchanged as well. Let's just get into it here. So I'm just going to look at the front month on all of my charts here. You can see the market here on the canola has pulled back. It hasn't pulled right back to the full retracement back to July, but it's come. Well, it looks like it could bounce and have a bit of a recovery here. Rapeseed, same thing. It's recovering here as well. And here we are with the soybean oil just starting a recovery. And soybeans moved down into that 50% retracement area, and looks like it could potentially be bouncing here as well. Yeah, your palm oil is still staying basically in this range, the blue area. Crude oil has moved down, but I don't know for how long, as the war still continues and fighting in 2 different regions of the world. This is a complex that I'm not certain if it can stay down. The same thing with the wheat when we get to that as well. Here we are. The diesel fuel has moved down the last couple of trading sessions here. Canadian dollar basically looks like we made a double top. Very likely to continue to push down there with the short-term moving average trading right above where the market closes here all the time, it seems. US dollar below that $100 index, trading at 99.9. And copper futures is still continuing to have this uptrend, and it seems to be bouncing off right where we are, around that 675 an ounce kind of thing. Here's your wheat market. We're still in that 61.8 retracement area. On the front months, Kansas has moved a little bit farther, but now it's still trading at that 61.8 at the moment as well, or above it. Your Chicago wheat just trying to get back to that 61.8 and went all the way down to below the 50% retracement area. Same thing with your French milling wheat. It went down to the 50% retracement area, and now it looks like it's recovering, and it's got its short-term moving average as some support there as well. Corn, it's seeming to have a bit of a recovery